And let me go on qualification. I'm no longer with GIC, and I can't speak for them. All right? It's an important qualification. All I can say is that because you are a sovereign wealth fund and you are investing in a foreign country, you have to pay particular attention to their business practices, their culture, and to show that you have respect. So I often, when I was there, referred to it as sometimes you are fighting with one arm tied behind your back. And some of the times it's not just about culture, it's the fact that the domestic institutions have a tax advantage over you. Right? So from a standing start, you already have a big disadvantage. Also needs somebody who knows the business well to say, well, what kind of information do you need? How do you, what kind of interrogation of the database, the data that you have, and what have to put together. So you have to be able to ask the right question. And it has to be the business people. And business people who understand data and understand how data is put together. That will be an advantage. So you have to combine the two. I would say that in general, okay, that real estate is expensive. It's not just real estate. All other investments are very expensive. All you have to look are the yields. So the question becomes, what do you do? And I often said to my old colleagues that I'm glad I'm not deploying capital anymore, because that's tough. The thing is that because real estate prices have been rising and you own a lot of assets, you also have to make the call whether you sell or not. If you sell, what are you going to do with the cash? Right? So it's not so simple as saying that, oh, we see interest rates probably rising, and I think that will rise. So yields will go up, so that will affect. But what do you do with the cash you have, the assets you have now? So it's not going to be so simple. The other, of course, big thing is, in fact, we have a readjustment or re-rating, if you like, because interest rates gone up, then everybody is in the same boat. So the people that can take position early, can think this through earlier, and will probably end up better off. Now, you remember the GFC, as I tried to say earlier on, that when the GFC, before the GFC, when the market was rising, debt was going up, it was easy to show that you are making money. It's when you get hit, then it starts to show who are really the ones that can sustain. So at the end of the day, it's sustainability. So I think the European economy is turning around, except the UK, and I can't say what Brexit is going to do. It looks bad going forward when it hits, but then Brexit may not happen the way everybody thought initially. So as far as the European side is concerned, it's been growing. The economy has started to show real signs of growth, and so we're seeing investments going to Europe. But again, there's so much money chasing deals. They are not cheap. So you have to find a good reason to want to be doing that. And even if yields continue to compress, and the good thing is, of course, when you have a strong economy, you will see increasing rental. That helps. The question is how long is that going to be before you see the compression of yield stopping, especially compression of yield. Rental is quite small incrementally most of the time, but a small change in your yield when your base is low, when your yield is low, has a big impact, negative impact on your price. initially when this idea of Belt and Road came about, nobody knew exactly what it is, but obviously the Chinese have been very serious about pushing this policy. And I think a lot of money is behind this. So it will certainly have an impact on the countries that are recipients of the Belt and Road investments. Singapore doesn't look like a direct recipient of the Belt and Road investment, not direct, but I think it can, because any investment involves financing, structuring, and so on, and we have well-trained talent that the Road and Belt people, the AAIB and so on, would like to recruit. In fact, I know at least a few Singaporeans, they are already working for AIIB. So talent is one. I think in the financing, structuring side, we will benefit from it. We don't have a multifamily sector, which is a huge sector in the United States. So you get a lot of multifamily REITs. Multifamilies are actually apartments for rental. And you can accumulate huge portfolio of these in the United States. And they generally generate very good, stable returns. And it's so I find it very hard to see how this can happen in a big way in Singapore when 80% of the population is already housed. Of the 20% that in private housing, my guess is at least 50% of that own their own home, so you have the 10% of the upper end. And question is, how do you accumulate enough assets to make it work in that 10%? I think 10% is probably not achievable. Probably a fraction of that to make it to have the critical mass to make the sector work in Singapore. But I think the so-called flexible living space can happen, but I also think that that's likely to be very small. I simply pointed out these things to say these things that we should be aware of, that there are opportunities, there are challenges. Now, your specific question about REITs, now I just sort of look at it and say we've done very well. We started late, but we've done extremely well. We should congratulate ourselves. But one of the reasons why we did very well is because a lot of our neighbors didn't have a REIT market. And even with their REIT, it's kind of semi-functional. So we've got this influx of foreign assets. And our REIT managers are very entrepreneurial. They went out there and they gather all these things and get them to IPO in Singapore. So my worry is that what if India started their REIT, China started their REIT, a lot of these people will start to list in their own market, which is the same anywhere else. So if you look at Singapore, we want to continue to be an important hub. What should we do? Some of the issues that the Singapore Stock Exchange is facing now, not just for REIT, but other things as well, as we know. So how do we make it happen? And I think I haven't really given so much thought, Penny, unfortunately, but maybe, we just start up a task force and actually look at and get what is the industry group that is involved with this. Yeah, they could start thinking about this and work together with the government to say, how do we lift ourselves to the next level? I mean, I'll ask myself, why did Manulife list in Singapore? Right? What are the reasons that they chose Singapore to list here? It's not as if they can't list that. They can. Could it be because that the REIT market in the US is so large, and if you're a small REIT, you don't have the visibility. So is it there? Could it be because that there is a recognition that there's a lot of hungry investor looking for opportunity to invest and to enjoy the kind of yields return which the Asian real estate in Singapore, for example, is kind of struggling to meet. For example, another thing that can hit us is that the REITs have been able to increase rentals in the shopping centers. That's now challenged. Because how can you continue to do this? At some point, it's going to pop up or reverse. So those are kind of things. And with the purchasing power of Singapore and Asia, as we become more affluent, then there's this opportunity that the players who traditionally only looked at Western markets will look at us. The other thing we have to promote that we have the infrastructure to do. We have the talent pool. Why did London continue to become the financial center, even though with the collapse of the Berlin Wall at the time, there was a lot of talk that Frankfurt would become the center of financial market for Europe. It was able to continue to become, I don't know about Brexit now, Megan, because of its pool of talent. And what is very important for us is the reason why London remained a financial center is because it's open to the right talent to come and work in the finance industry in this period. We have to continue to do that. If we start to shut our door, then how many homegrown talents in this area can we produce? So somebody was asking me, in fact, the guy from AIIB, and said, they really now need people with the right language skill. And he said he's looking for Russian and Turkish-speaking investment analysts. And straight away, I knew it was London to look for it, because that was where we recruited those people at the time when I was at GIC. So we had Russian, we had Turks, we have Italian, we have Polish guys all there. And in fact, one day when we had a lunch and there were two tables, probably 10 people, right? There were 14 nationalities. So that's the kind of thing you need if you are going to be able to provide skills to invest. And London was used as a hub to invest in Europe. So I don't think I specifically answered your question very well, but this is something I think we should challenge ourselves and think about going forward. And the main resource we have in Singapore is people, right? That's why, and we have to build on that. We can do all kinds of pack things and so on, but we are not going to be that big, that significant the little red dot is already punching way above its weight. But however hard you punch, it's still going to be small. Double the size of our dot is still going to be small.